get my salary. Today I am getting my salary credited into my bank account. TDS is deducted on the salary. TDS is deducted on that salary. Then next day, I am buying tickets for my family to go abroad. We are going to Singapore for a trip. When I am buying that, 20% TCS once again deducted. Can you imagine? On that income, already tax is deducted. Now once again on that expense, 20% they are captured. Now what will your answer be, sir? It is how you can do it, it's an expense. Income tax answer is, you collect it as a refund. But when I can collect? 1 year later. When I file my return of income. I can get it as a refund 1 year later. I need the money now. If I am sending it for my son or daughter abroad, they need the money today. That 20%, what's the point waiting? When the income tax was asked this, the finance ministry was asked. When they asked them, why you put 20%? They said it's for tracking. But tracking means 1% is also tracking, no? Why you have put 20% to track? 1% is enough to track. Then when they asked this follow-up question, there's a very flippant answer given. From our analysis, these people can afford it. I know. Is that fair? There may be certain people who are evading taxes. I'm not debating that. There are definitely evasive people. Action has to be taken against them. But because of those 10 people, you cannot make 90 people suffer. And in fact, the first rule when they brought this out, it was said that credit card payments that you are making also, 20% TCS will be deducted. Imagine, you are going abroad, you are having fever, you go to the pharmacy, you are buying one Dolo in Singapore, Dolo 650. They'll say give 800, here swipe my card. They'll swipe it, they'll say only 80% has come. Where's the 20%? My government has taken itself. You swipe again for 20%. Again the 20%. I thought this is why in fact the credit card company said we don't have the software to do this transaction. We are not equipped to do this transaction. So give us time. It was delayed. Luckily it was not brought into effect. So as it stands, that is not covered. But all of this is covered. 20% very, very high is my view. Yes, there has to be tracking. Yes, people evaders have to be tracked. But not at 20%. I would say 5% maximum is reasonable. Maybe 10% also. But 20% is extremely high, extremely unfair. Next, no basic exemption for non-residents if you have capital gains. Let's take an example. You are a non-resident, you buy shares in India, you are selling the shares. You are getting a profit of 20 rupees. 20 rupees profit you have got from the shares. Is it taxable? Normal resident, not taxable. Why? Basic exemption. Up to 2,50,000 basic exemption I have. But if you are a non-resident and you have capital gains, please note, you have to pay tax on every rupee of the capital gains. You have no exemption. There's no limit. Basic exemption not applicable the moment you become a non-resident. So any capital gains you have, short term or long term, you have to pay tax on the full amount at the full rate, even though it is less than the basic exemption, not taxable. Now the next major one, the TDS on sale of property. Where I am selling a property in excess of 50 lakhs. What is the rate of TDS? 1%. 194IA. We have all seen that 194IA. 1% is the TDS. But if I am a non-resident, the rate of tax is 20% of the sale value. 20% of the sale value is my TDS that I have to pay. Even if it is a loss. You see this example. Sale consideration 3 crores. Cost of acquisition after indexation is 3.2 crores. That means it is a loss. Yes. Capital loss of 2 crores. Sorry, 0.2 crores. 20 lakhs loss. What is the tax? What is the tax on the loss? Nil. There is no tax payable. If I am a resident, then TDS is deducted at 1% of 3 crores, which is whatever, 3 lakhs. If I am a non-resident, 60 lakh rupees is your TDS when your tax is nil. So where you have to pay nil tax, you are paying a TDS of 60 lakhs. Sir, can I get us a refund? Yes, please give. Come 1 year later. When you file the return of income, that too, one more thing. If your TDS refund, if your refund is beyond a certain limit, they specify each year, the case becomes a scrutiny case. So if I have high tax paid or high refund of 10 lakh rupees, 12 lakh rupees, etc., the suspicion is that you are converting black money to white money. So it's an automatic scrutiny case. So imagine tax is 0, ஆனா நீங்க 60 lakhs collect பண்ணிட்டு refund கேட்கறத இருங்க சார் scrutiny பண்ணிட்டு கொடுன்னு சொல்லுங்க. So it's a little bit of a catch-22 situation. But is there a way out? The answer is yes. The answer is yes. You have to get what we call a low deduction certificate in Form 13. In Form 13, you can get a low deduction certificate. Now, let me explain some practical things over here. You have to apply online and you have to get a TAN number for this. And when you apply, generally, the normal time taken is somewhere between 25 to 30 days. Now, when a non-resident is selling a property, can they wait 25 to 30 days? On full year leave, they are eligible only 20 days leave in the full year. So when they come here, they are in a hurry. I want to finish. You found a buyer, no, come, let us close the deal, I want to close the deal, etc. You have to negotiate, you have to finalize the rate, enter into a sale agreement or draft a sale deed, and then only you can proceed with it. So there are so many preconditions which are there before you can complete that transaction, and you do not have 25 days to wait for a low deduction certificate. So what is the process? You have to apply online. Once you apply, they will allocate an officer. After apply, it will go to Delhi. Delhi will allocate an officer in Chennai. Anyone with little bit experience in this area will already know who the officer is. Because irukkiradhe moonu officer na Chennai la. So it has to be one of the three. You go to one, he will say as per PAN, name starts with this alphabet, you go to the next person. So you already know who, but Delhi has to allocate. Delhi will take 6 days to allocate. Why, don't ask me. That's what happens. So 6 days the system takes to allocate, then it will come to the same person and you will have a hearing before it. You have to submit the documents and finally they will have their own process. They have to give a hearing, they have to take time and then only they can pass the Form 13 order. So it takes around 25 days. So I am going to give you some tips. These tips are not there anywhere. These are not there anywhere. I have read so many books, seen online, but I am going to give you some tips. What are these tips? These tips are, if you want a Form 13, ensure you have all these documents. Sale agreement or draft sale deed. Purchase document. Have a computation of the capital gains calculation. Latest property tax bill and electricity bill. Guideline value from the government website. Outstanding tax dues, extremely important. I will tell you an example. One case, one assessee had come to us for low deduction certificate. Came from a very, very reputed family, one of the leading businesses in Tamil Nadu. So when he came, he took up the work, we started doing. I said, don't worry, we will get it. Because I have got the TDS or the low deduction certificate in 10 days. Less than 10 days I have got it. So funnily, there's a joke, no. One person went to an advocate. He said, sir, I want a good advocate for this case. Who should I go to? He said, you go to Mr. X, he's a good advocate. Sir, I have one more case. This who I should go to? They said, you go to Mr. Y, he's a great advocate. So what's the difference between a good advocate and a great advocate? A good advocate knows the law. A great advocate knows the judge. So sometimes that plays a very, very critical role. Knowing the judge is very important in this Form 13 because you have to know who to go to. You should know what documents to give. So here in this particular case, this person had come, he was in a hurry. And then we are waiting, met the commissioner, they have satisfied themselves, they are happy with the documents they are given, but still they are not issuing. Finally, it came to light that this person had a 10-year-old tax due. One case which is there, it is 10 years old. And he has not paid the tax on that. So where you have tax dues, you cannot ask for a low deduction certificate. You cannot say that, sir, I have to pay 10 crore tax, but 2 crore refund coming. You give me low deduction this time. Cannot do that. Their whole idea of collecting this tax is to adjust against your old dues. So where you have old dues, they will not issue your TDS certificate unless you file appeal. So in this case, we came to know of this case, we filed appeal, got the documentation, we are able to get the no deduction certificate. But getting and knowing the outstanding tax dues is extremely important. Passport copy of the NRI, PAN card of the buyer, STAN card of the buyers, 26 years wealth tax return, or a statement saying I am not accessible to wealth tax. You have to provide all these documents. The reason why I am telling you this is you don't have this anywhere. This is an unofficial checklist. If you apply for a form 13, you are waiting for it to come, it will not come because you will not given one of these things. And as I told you, you are in a hurry to get it because that person is there only for 20 days, he has to finish the deal, etc. You don't want to go for multiple hearings. Sir, you have not given this, in another 5 days, I want this, another 5 days, then that is gone. You've already lost 15 days in that process. So ensure that you have all these documents. You can prepare it in hard copy and you can give it before the assessing officer physically. You can get a seal also on it officially. You can submit it officially. If you do this, you can definitely get it processed a little bit faster. Let me wrap up the session with what I call the ultimate checklist for NRIs. And this is my preparation of what is the ultimate checklist if you are an NRI. Every time you visit India, complete your KYC, close all unwanted bank accounts. Most importantly, convert your SB account into an NRO account. NRIs are not permitted to have a SB account. It is a duty of that person to inform the bank that they are a non-resident. It is your duty to inform. Bank is not going to know automatically you are non-resident. You have to communicate to them. You are not technically allowed. People still have, but you are not supposed to. As per FEMA, it's a violation and they can levy a penalty equivalent to the account balance. They can levy a penalty equivalent to the account balance if it has to. So FEMA, they are not doing it, but it's better to convert this. Keep net banking account naturally, ensure contact details are updated, change demat account also to NRO account and update the details on income tax website. If you have an Aadhaar, let me ask you, can an NRI have an Aadhaar?
Yes.
Yes? No?
Yes.
Yes. Earlier they said first not permitted, but subsequently it was allowed. So now NRIs can also have an Aadhaar. So you can have an Aadhaar, there is nothing wrong in having it. So ensure if you have an Aadhaar, it is linked to your PAN, no name, date of birth, mismatch, all that. And of course, file the income tax returns. Finally, because this is just general advice, I think this probably will wrap up this session. Wanted to touch upon one thing only, which is in capital gains. I got asked this question before I came into the room. If I am a non-resident and I sell a property in India, 54F is there. I sell a land or I sell a residential house in India. Can I reinvest in a house in the USA? Yes?
Only in India.
Like only in India?
We can reinvest and either we can go for reinvestment in India for a new house property.
So,
or CGDs,
capital gain deposit. Okay. Now, there is a case called Prema P. Shaw, where the same issue arose, and they held that you can reinvest abroad. There is nothing barring this in the act, but that is at that time. Now they have modified the law. There they have said, now the act is very clear. It says in India. So you must purchase a new asset in India. So before 2014, you could have done it. After 2014, act is clear, it must be in India only. So with this, I wrap up the brief analysis on income tax for non-resident Indians. Thank you very much for a very patient listening, and over to the audience.
Taxation of non-residents. One takeaway I want to tell you, this will be very useful when you are advising. Whether it covered, I don't know, I was in the other room. Suppose if a non-resident Indian is selling today, the TDS is very, very harsh and TAN number is a must and his movements are being tracked. So, if a person, non-resident is coming here, instead of executing a power of attorney before the honorary consulate, what is best for him is, he can come here and he can settle it in his relative's name. Because cost to the previous owner, so capital gains calculation will be same. The TDS of 23% you can avoid it, and the TAN number furnishing is not required. This is the thing which we have to do that. Silently we have to do that as such. The reason is otherwise the non-resident coming here, entering, then as he says, no, asking for a lesser deduction and all, immediately not possible in 20 days. Sometimes these US people are coming with 10 days, immediately they have to go, lot of pressure on the professionals. So best is that use those 10 days to transfer it to, normally father will be settling in favor of the son or daughter, you know. This is ulta. That son or daughter who is in US or UK, he will come and transfer in father name or mother name. That is the way. And whatever clubbing and all, we need not worry about it. And capital gains calculation also cost to the previous owner only. The holding period of the previous owner will be taken into account. So what you have to do, come and settle it. And coolly you can walk away. This is the way you have to do that.